Welcome back, everyone. It has been a while, and I apologize for my absence. I've been busy, and for a while I didn't really have too much to say. A few things came up. I was really busy, but now I'm hoping to get some videos done. And today's video is going to be about uranium, an update about uranium. It's been a while. Today's video is called Can You Feel It? Because I think that what the market's feeling, how much of the disruption to hit the market is something that needs to be talked about. And also, I think we're very close to being close, if that makes sense. And I will get into all that in today's video. So the first thing that I wanted to point out was one of my logic errors. Now, a few videos ago, I pointed out that the forecasting doesn't make any sense. And here in a video after that, or the video where I talked about the Kazakh cut, I made a little bit of an error, and I wanted to clarify where I messed up. And it's not super big deal, but it's relevant, and I messed up a little bit, and here we go. So I said that I looked at the impact of the Kazakh shutdown, and I said, in theory, it should be a few more months, but I don't know who's going to sell. You could look back, I said something like that. I don't know if those were my exact words, but it was close. And what I meant was sell in the environment of, well, Kazakhstan's not producing and whatever and whatever. My problem was when I had looked at my spreadsheet, when I looked at my numbers, I'm like, okay, Kazakhs are going to produce this much less this year, so minus this much. What I neglected is that the impact is going to be delayed. So it still hasn't fully happened yet. In fact, it still hasn't mostly happened yet. It's just starting to be an impact months later. So that's one. Two, this market, it looks like it's obviously not seeing what the bulls are seeing, because if it was, and if it was going to predict it, if it was going to predict what the bulls are predicting, it probably would have moved already. But it doesn't look like it is, which means it needs to feel the impact and feel the lack of availability of enough uranium before it will move. And by that logic, it hasn't felt the Kazakh numbers that I just quickly went into my sheet and put minus whatever. And by the way, I don't have the minus fully 10 million pounds or 4,000 tons. I don't have that. I'm using their guidance number, which I believe, I'll get to this later, but I believe is not done yet. So that is where I kind of messed up in thinking through how the Kazakh shutdown is. Now that said, the price did move up on the news of the shutdown, so it wasn't the worst error to make, but it does delay things kind of coming to where we were for a few months. And this takes me to my next point about the disruptions that we've seen in the uranium market. It hasn't been boom, everything's gone. It has been a rolling outage. It has been the tale that I'm sure many of you heard about the boiling frog. You put frog in cold water and you slowly boil the water. And I'm not a fan of killing frogs, but eventually not even going to realize it. But if you put it in boiling water, it's going to jump out. So here, this is more a case of the slow boil, in that the Cameco outage, it wasn't just boom, pounds disappeared. It was, okay, those pounds are going to disappear over the next this amount of time. With Kazakhstan, it was okay, we're going to set the timer to turn on the stove type deal. So it's still has not been felt. I'm looking at my numbers now, and I think that less than half of the COVID-related effects in the market are going to be felt at this point. Now, the rest still will be felt later, maybe some later this year, maybe next year. But we can't bake them into the market for a while after even we know that they're coming. Now, there's one more slight wrinkle. Hearing that, you might think, okay, so we're here, and down the road, when we get there, all the impacts will be felt. Again, not exactly, because we can't know at this point how much of the expected impact will be drawn from inventory and so not felt by the market maybe for years, as the companies may slowly rebuild up the inventory, or they might just buy in the spot. So again, we can't know exactly. If I was working on an assumption, I'd say we probably see at least 5 to 7 million pounds from the impact get drawn from working inventory, because that's what the working inventory is there for, unplanned disruption. Now, the more that gets drawn from working inventory is just a bigger issue later. But again, it's hard to say pin down a time, even if we knew all the numbers, which we don't. We can guess sort of at some things, but it's hard to pin down a time of when the market will be feeling all of the disruptions that we're seeing. The last thing that I wanted to mention from a prior video is that I also said something along the lines of this can take a bit longer if people either, I don't know if I said back themselves in the corner, dig themselves a hole, but basically get themselves in trouble. I don't know how I said it, but that is what I was probably understood from what I said. Now let's look at a few things that have happened. Well, Uranium Participation Corp has lent out £500,000 at basically a 10% interest rate. Well, if pounds are infinite on the spot market, why borrow and why have to pay such a high interest for borrowing? Well, someone wanted to borrow pounds for whatever reason. I've also heard that traders have pulled forward supply, which means, let's say they have a contract and maybe they're getting from later this year, they have an offtake, but they see the price is high, so they may try and deliver now and maybe replenish later. Again, same type of thing. I didn't really think that this would happen, and it hasn't happened to a massive scale, but I wrongly didn't expect this type of thing. But here you can see a few examples of it from news releases from the market and from discussions. But what does it all mean? I can hear you asking. I'm talking about a lot of different things and not really talking too much about how they mesh together. Well, I can't tell you how they mesh together exactly because it depends on dozens of decisions in half a dozen countries from all sorts of people with different market outlooks and ideologies. Could not tell you. That said, I'm not super surprised that we're not higher now, given what seems to have happened over the past few years, what this market seems to be predicting and not predicting. So I'm not super surprised that the price isn't higher. That said, I'm looking at this market and I'm looking at how much time left given the current trajectory, how much time I think things are going to take, and I don't think it's weeks. I don't think it's years. I'm looking at months is my sweet spot time frame. And I also don't think it's going to be straight to infinity. And I've been thinking this for a while, and someone mentioned in a conversation the other day, it's not going to be straight from here to whatever top price of uranium you want to put. There's going to be slowing stops along the way. There's going to be consolidation because there's going to be people that are thinking, okay, well, once Kazakhstan's back at full production, then the price is going to go back down. Or then, okay, but once Cigar and Kazakhstan and are back, everything's going to be fine again. Yeah, okay, I wonder how much uranium Cameco's selling in the spot market from Cigar. They're buying 20 million pounds for Cameco, and I'm sure they're selling all of what they produce at Cigar. Yeah, yeah, I'm sure they're doing that. But anyway, there's going to be, okay, well, once MacArthur and the other care and maintenance mines are back, then then there's plenty of uranium. There's going to be fighting, there's going to be difference of opinions, not fighting, but there's going to be arguments at every step of the way. It's not going to be a straight road up. So, but what I can say is that the longer this is taking to get going, I think it probably means that the final height of the cycle is maybe higher, and I think it also probably makes things steeper on the way there. So then there's a next point that it came up kind of in conversation with someone else the other day, and that is, well, with all these disruptions, shouldn't the utilities be in the market? Shouldn't they be buying? Well, yes, I think they should be, but this is A, not the season that they normally buy. B, they they look and believe and probably are covered enough at this point. Now, are they covered um, fully forward? Absolutely not. They have in even in a worst case scenario, near term worst case scenario, they have inventory. And not only do they have inventory, but they have a bit of some forward contract coverage. So it's not going to go from, okay, no hurry to even buy as much as we're using to, oh my God, we're missing in months. That's not going to happen. They're covered a little bit, so they don't have to panic. They don't have to do anything. I don't think from here that they want to draw down much more inventory. I think that we're going to get to a point where they're actually going to want to have more inventory than what they probably currently have. And I think they're going to have less inventory between now and a year from now. But I do think that they have other things that they're concerned about within the fuel cycle. I think that the bottleneck in conversion is probably more of their concern than the availability of U3O8 at this point. Because if you look at the EIA report, you can see from last year, despite the prices being up massively in conversion, there was still a drawdown in UF6. Means something there is not necessarily as it should be. So think of it this way. Are you going to be worried about having enough eggs to be baking if your oven's broken? No. So they probably want to see Orano ramp up their new facility in France, and they want conversion. They're worried about conversion being, in line. And plus on U3O8, it doesn't make sense for them. They're not incentivized. It's smart for them to see how it goes and do what everyone else is doing. Not because it makes money for the company, but because it is more so the way that people can not take their career, not risk their career trying to make a call that they don't benefit from. It's smarter for them, and they're very smart people, but it's smarter for them to not really look too closely and just kind of, well, everyone's doing this, so not my fault. Now, how's the cycle looking? I'm thinking now that if the market had moved 1 or 2 years ago, like maybe it should have, that the cycle would have been a bit slower and a bit less, the price movement would have been probably less fast than it now should be. But my guess is that because of the destocking and because of the disruptions and because the market is not fully maybe on the same page with some of the forward-looking events that it should be, that there might be some surprise destocking. And I think that the surprise destocking that's not intended, will probably, and more probably by the day, lead to future restocking. And I think restocking is something that is really the catalyst to take the price higher than it should, and that can have a whole bunch of knock-on consequences. And it's too early to say, well, that's definitely going to happen, unless, well, it depends on decisions, but it becomes much more likely by the day. And a small restocking cycle is more bullish than the regular whatever pricing cycle. A large restocking cycle is very bullish, particularly due to, well, it depends on how quickly they feel the need to get it done. And we'll see if that happens later, but the likelihood of it at this point gets a lot better by the day. So I actually think I'm going to wind down the video here because I'm actually only about halfway through the slides that I had prepared for today, and it's getting a bit long. So I'm going to make another uranium video this week in a few days, and it's going to be the continuations of my rambling. It's going to be talking about why restocking is a big deal. It's going to be talking about the Kazakh extension, which I actually don't really, we'll see, but I don't really, don't have super high hopes for for its impact on the market in a bullish manner. And also, I'm going to talk about what some of these things mean together with regards to next year, how they're going to impact next year and what we see next year versus where we're at some point this year. So that's what you can expect from the next video. Until then, have a great day.